What is the mortgage process? Now, this is a really interesting question because a lot of first time buyers don't understand how it works. Now, what initially happens is you'd go to a mortgage advisor and they would work out how much you can afford. Now, basically, they'd use either income, self employed income, or even benefit income. Once they've worked out what you can afford, then you can go out and look for your property. While you're looking for your property, you can also, now you know what you can afford, you can decide what kind of deposit you're looking to put down. So based on what you can afford, say it's 200,000, have you got enough money to put down a 10%, the 20,000? Would it be a 5%, the 10,000? Obviously, there's different scenarios, but once you know what you can afford, that is the starting point for me, because then from there you can decide whether you're putting down a 5, 10% deposit and work out what you're working. Right, the next step is, as I said, looking for a property. Once you've found the property, you can go back to the mortgage advisor at that point and they can source a deal for you. What I mean by that is they will look based on your affordability, what kind of mortgage can you get, and how much the monthly payments will be. Now, you discuss with them your budget, how much do you want the monthly payments to be, and they can extend or reduce the term accordingly. But what I would say to you is there are two types of terms. There's the term for the actual deal. So mortgages, they can be a fixed rate, which is the same rate continuously, or a variable rate. So if it's a 5-year fixed, for example, then it's the same rate for those 5 years. Now, the other term is the term of the whole mortgage. So based on your age, you can do 20, 30, even 40-year terms in some circumstances. The good thing about it is it reduces the amount of money you pay per month because you're paying it over a longer period of time. But the bad news is you're also getting charged interest a longer period of time. So the interest that you'll pay on a 40-year term is a lot more than a 20-year term. Now, what I try and explain to my clients is it doesn't matter if for your very first mortgage you go with a 25, 30, 35-year term just to get yourself on the ladder. Because if, for example, you do a 5-year fix, when you then go to do a new deal in 5 years time, you can reduce that term right down. It doesn't have to stay at the long years that you've originally got to get onto the ladder. You may have a change in circumstance, you may be on more money, the property may have gone up a lot, interest rates may have gone down, a lot of things might have happened that means that you don't have to have that long term. It's not set in stone forever. Just do what you need to do to get on the property ladder now, and then you go from there. I hope that answered your question of the buying process.